Five.
Good morning, traders. Happy Monday, and welcome back to the Trader Bacon Show. I am your host, Gates Adams, and we have a phenomenal show in store for you today. First and foremost, we've got to take care of a little bit of business. We have 3 evaluations that we will be giving away from Apex Trader Funding. There will be a link in the chat, and we will be, of course, you fill out that form, and we'll be picking 3 winners from today's show. Want to congratulate last week's winners. You should already have the information on that, and should already have those activated. So congratulations to you guys. 3 new winners for today. So keep an eye out for that link here in just a moment. Also, want to let everybody know the 80% off at Apex Trader Funding has been extended. So as of right now, you can go to apextraderfunding.com, use promo code Benzinga, and you will get 80% off of any evaluation, any size, any platform. So make sure to take full advantage of that right now while that's still available. I'm going to share with you guys something that I've been sharing in social media. If you don't follow me on social media, you can find me at The Forge Trader pretty much everywhere. Trader is spelled with a 3 instead of an E on TikTok. All the rest of them are spelled properly. But I've got to, one of the things that I try to do is be completely transparent on my journey. And last week, I was having a phenomenal week. In fact, I was having a record-breaking week. And I fully went on tilt on Friday, and I blew 19 of my 20 PAs. And so I will be talking about that on this week's episode of the Forge Trader podcast, along with some cool and fun things. So make sure to check that out as well. If you don't follow me on social media, you can check all of that, all of my daily recaps out as well. X, Facebook, Instagram, TikTok, YouTube, all the good stuff there. So make sure to check that out. Today, we're going to have a phenomenal show for you. I've got my my trader buddy, Miguel. He's going to be sharing some of his insights and what has brought him to this level of success on today's episode of the Trader Bacon Show. Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now. Miguel, good morning. What's up, buddy?
Good morning. Good morning.
How's everything going?
Going pretty good. Can't complain.
Excellent. Well, welcome to the Trader Bacon Show, man. I'm loving having you here. And, of course, we've had a chance to chat a little bit about your journey and kind of where you came into the world of trading. What I like to do is just really kind of start with that foundation. So let's talk a little bit about what brought you into the world of trading, man. How'd you get into the business?
To be honest, during the pandemic in 2020, which I find is pretty popular for most of the traders today, that was usually the time where people were kind of trying to figure out what was their next move. And I was introduced to the Forex world from one of my friends. And he kind of showed me the ropes of how trading works and, like how to try to figure out the markets.
Sure.
And unfortunately, we were using the RSI indicator and no stop loss, and it was a complete disaster. And so I think a lot of people, when they first start out, they don't really have any idea or direction of where they're going. And so, yeah, that's kind of what we did. And I paper traded for about a week and a half or 2 weeks, and I thought I was Warren Buffett, and it didn't quite work out that way. And I realized very quickly that this is not a get rich quick scheme, and it's going to take some learning. And that's when I kind of adjusted.
Well, it really is. It's so interesting the way that we get into trading. And look, I think that for every trader, you really have to have that entry moment, because we can paper trade for 6 months or a year and probably get pretty close to the same experience we get in just a month of paper trading. But it really is when you take that next step, that next plunge, where something's on the line, whether it be, an evaluation or your own funds or whatever the case may be, because that starts to make it real. And we have different types of traders. We have these super analytical that will go 6 months or a year paper trading, and we have guys that are impulsive and will jump in a week and a half. It doesn't matter where you are on that spectrum. That is a necessary step, right? So
100%.
How did that jump play out for you?
So one thing that I can say about the paper trading is that you don't realize this in the beginning, but as you trade more and more, especially when you put your own money on the line, there's no emotion involved in trading. And there's no emotion involved in paper trading. And so a lot of it, you don't even notice it up front, but when you do take a trade in a paper trading account, it's not real money. You don't have that same emotion, and so what ends up happening is you end up holding these trades for much longer than you would normally hold them, and they might turn out to be a winner.
Right.
And when you take that same mentality into the real markets and it's your real money, you learn very fast that you are an emotional creature and
Sure.
it's going to eat you alive to have to deal with, all that type of drawdown. So yeah, that was
For
something
sure.
that I learned very, very quickly.
I remember in my early days of paper trading, I had a profit target. And my whole mindset was as soon as I hit this profit target, then I have developed enough skill to trade live, right? What I didn't account for was how many times I reset that paper balance before I hit that profit target. Luck factored in, of course, right? But
Yep.
we don't think about those things. It doesn't really sort of register the same way. So,
Mhm.
what did the journey look like for you once you're actually all in and trading real money? Where did you go from there, man? How did you start to progress?
So originally, what I did was before I even got into the forex markets, I had invested in some stocks, like some blue chip stocks,
Sure.
and there was no real strategy behind it. It was just like put a few dollars into the big names, and of course, you speak to a couple of people, and they're like, invest in stocks. They don't give you the breakdown, but it's just like buy some stocks, and you'll figure it out from there. And so that's what I kind of did. And then after I did the paper trading, I opened up an Owanda account, and I probably threw maybe $500 to $1,000 in there, blew that about 2 or 3 times, and that was when I realized that you have to learn how to do this, and if not, you're literally just donating money. And
Right.
it might be considered your tuition, but if you don't know what you're doing, you're just giving away your money for free.
There's two sides of the tuition conversation. One, of course, is dealing with the psychology of trading and learning how to mentally handle the emotions. The other, of course, comes into strategy. Now, some people's tuition is paid via YouTube, and it's that tuition is based on time, whereas other people will take a course, hire a mentor, whatever. What did that look like for you?
Yeah, so I went down 45 rabbit holes on YouTube. I've tested out every strategy you can think of. I'm sure everybody has seen the YouTube channels that tell you this is a 95% win rate strategy.
Love
And
those.
you go and you back test it and you find out that that's not the case. It's literally impossible to figure that out. So, yeah, I've been down all those rabbit holes. Eventually, I did purchase multiple courses from different people. Some of them were like very beginner friendly and just to teach you the ropes. And then there were some courses that I purchased that actually, taught me a lot about trading. But one thing that I've learned about purchasing courses from people is that what works for one person doesn't work for everybody. And so a lot of it comes down to the strategy that you're using. If it's not tailored to your personality, then it can be a great strategy for the person who created the course, but it might not be a great strategy for you because you might only be good at scalping
Mhm.
because you don't have the you don't have the mental capacity to hold a trade for, let's say, 3 hours. And so that's something that I definitely learned. And you got to kind of take a little bit from everybody and then make your own decision as far as, how you're going to run this strategy.
Well, and that's such a great point. I've talked about this here on the show. I've talked about this in the podcast as well. But any reasonable strategy has the potential to have an edge. And one of the reasons that we do this show, the format that we do, is which is where every trader is going to highlight their strategy, is not to basically get the audience to jump from one to another to another. We're not sitting here selling strategies or anything like that. That's very, very important to understand because that is one of the biggest mistakes that most traders make early on. Is it's they have a bad week and all of a sudden the strategy doesn't work anymore, and they're just looking for something new versus honing their strategy and molding it to their particular personality. So that's a big focus of mine as we do this, as we explain different strategies. Is look, there's a point where you have to jump strategies. When you're brand spanking new, you got to figure out what's going to work for you. But when you find something that makes sense, hold on to it, build it, grow it, develop it, and become a better trader with it, right? So as you go through this journey, as you ultimately got to the point where you landed on the strategy that you're using now, did you have success with one strategy and hone it, or had you actually found success through different strategies along the way?
So when I first started trading, I thought that I would find the holy grail indicator. That was
Sure.
something that I thought was a real thing, because if you go through YouTube, you're going to find a million different indicators, and they all seem awesome until you put them on the chart and you realize that all indicators are lagging, and
Right.
it's you'll see the move pretty much after the fact. And so that was something that I did in the beginning. I used a bunch of indicators and my chart would look crazy. And what I've learned over time is that the more simple you make this, the easier it's going to be, because trading in general is super complicated and it's complex, and there's so many different variables that go into it, that if you just simplify it as much as you possibly can and make it mechanical, where it's, I look at this setup, I get in at this time. If I win the trade, great. If I lose the trade, go home. And if
Sure.
you can do that, that will save you a lot of blown accounts, going on full tilt. And what I also learned too, and this is something that I've been doing a lot recently, it's back testing,
Yeah.
because something that I've learned is that if you don't have confidence in the trade that you take, it's going to be very difficult for you to continue taking the trade after you've lost a few times.
Sure.
If you lose a few times and then you don't feel that same confidence, go back and back test,
Mhm.
and it'll rebuild that confidence to let you know that this actually works. And if you just follow it, it'll help you in the long run. I try to do that on the weekends. That's
For
usually what I
sure.
use my weekends for.
And that's great advice. I mean, whether you're back testing or forward testing, depending on your particular preference,
Hmm.
whatever, however you want to manage things, I think it really does take somewhere in the neighborhood of the data from 100 trades to say today didn't matter, right? When you have 100 trades of data and you can see my win rate is this, my average risk to reward is this, those metrics tell me if this is a winner over the long haul. And when you have that type of solid information, meaningful information, that's when that confidence, as you mentioned, comes in, and it's maybe at that point easier to let go of today's results in the grand scheme of things. But until you have something along those lines, again, whether it's back or forward testing, it really is hard to get past today matters.
Yeah, no, I agree 100% with that. And the one tricky part about that is that we can say it till our face turns blue, but the problem is that we're human. And
Exactly.
so, because we're human, it's very easy for us to listen to someone say this. But until you get excruciating pain of blowing all of your PAs or all of your funded accounts, and you do it multiple times, eventually at some point there will be a turning point. But that's only for the trader to experience. You
For
can't,
sure.
we can say it as many times as we want, and unfortunately it's going to fall on deaf ears, because we are human and we run on emotion, and the markets have absolutely no emotions at all. And so
And
that's the tricky part.
For sure. And I've said this a million times, and I hope I'm wrong, but I don't think we ever get past the temptation and the emotional reaction to losses or bad entries or whatever the case may be. I think ultimately we develop the skill at resisting that. I would love to find out that I'm wrong and that there one day it's just all gone. But
Yeah.
I don't think it works that way, right? So let's get into some nitty gritty, man. So you spent some time, you've built your strategy. Let's talk a little bit about the strategy that's working for you and what's turned you into a profitable trader. Let's go ahead and pull up the charts and let's
Sure.
dig a little here.
Okay.
So what are we looking at? Are you primarily trading in Q? I can't. That's too small. I can't see and it's also dark.
Uh, Let me see. Can you see my screen here?
Yeah, we've got it.
Okay. All right. So yes, I only trade NQ, which is like a love-hate relationship.
Always.
Um, it's a very, very volatile. as you would say, stock or indice, whatever you want to call it. So I usually, what I do is I look at the 5 minute chart, the 15 minute chart, and the 1 hour chart while I'm actually trading. And I kind of want to see everything work in conjunction with each other. Um, and so the idea is I also have this 20 moving average. And so what I usually like to see is I don't trade the first hour of the day.
Okay.
And this is something that I've learned about myself, because what ends up happening is within the first hour, there's a lot of up and down. Even if you look at today
Yeah.
from the first candle, within the first 20 minutes of the market open, we went up and then we crashed back down and then we decided to go back up. So what I
Right.
usually do is I wait for the first hour so that I can see what the direction is for the day.
Sure.
Doesn't always work that way, because sometimes we'll go up at up to 10:30 and then we'll just slam back down, and there's nothing you can do about that. But I like to trade with the trend, whichever
Right.
the trend is for that particular day. I like to trade the trend. And usually what I do is I wait for a pullback up to the 20 moving average.
Mhm.
And then I look for a setup, which would be, if, like, as of today we're moving in an upward direction. So I would have waited for 10:25 and then 10:30. We pull back to the SMA, and then when we get a break above the previous candle, that's when I would have probably entered the trade. And then usually what I aim for is the high of day. If
Okay.
it was in the opposite direction and we were under the MA, I
Mhm.
would look for a short up to it and then drop back down to the low of day. And what I've learned is that that makes things much more simple. It's a lot more mechanical.
Mhm.
And I won't take a trade unless we get back down to the SMA and we see some type of bullish reaction from that bounce there. Now, if we would have just broke through the SMA and just completely crashed down, I would have just minded my business and went to the gym, because
Nice.
it clearly has no direction or no idea. And I try to keep trading as simple as possible so that I can make my life a lot easier.
Now, it's natural entry signal. So I'm looking at what you've got on here. Are you looking for, like, as a bearish move, for example, in this
Mhm.
case, when it hit that SMA, are you looking for that first 5 minute candle to engulf the last down candle, or what actually triggers an entry for you?
Yeah. So usually, what I learned from my time in trading
Mhm.
is pretty much, if we get a candle that breaks above the previous candle,
Mhm.
in theory, the candle is supposed to continue to go up.
Right.
Now, of course, trading is not that way and it doesn't always work that way. So there will be times where the candle, I mean, you'll see a break of the candle and then
Mhm.
it'll slam back down. And so the idea is to take clues from what happened previously to this.
Sure.
And if you look here, once we got the sweep into the SMA and
Mhm.
then we broke above, that would have been my trigger. I don't
Got
wait for the candle to close before I enter it. I'm pretty much setting a stop order above the break of the previous candle. Also, something that I've incorporated into my trading is I wouldn't have taken this trade if the first bar was the one that came all the way down and we only had a 1 bar pullback to the
got it.
SMA. I try to give it at least 2 to 3 bars before I would enter a trade on the off of the SMA. And then once we break it above, then my target is usually the high a day. I'm not trying to hold trades. I trade with prop firms,
Sure.
Apex especially, and so I'm not trying to hold trade for 400 point moves. I just
Right.
want to get in, make my couple of $100 and move on for the day. And that's pretty much the idea.
That's beautiful. And so the way that you place this, you set your stop at structure, or do you have a set stop amount that you choose?
So what I used to do was the trigger bar, which is the previous candle before, I would place my stop loss below there,
Okay.
and that's usually where I would have my stop loss. What I noticed though is a lot of the times the bar after that, it would come back down and just sweep that candle and then continue up in that direction of wherever it was going to go. And so what I've done is I've learned to move my stop loss a little bit lower, and what that means is I would have to use less contracts, smaller size, so that I can give it a little bit of breathing room to get to where I want it to go.
So you're allowing for that second sweep, as it were, if you're a liquidity type person, and then allow it to move forward from there.
Yeah, because I there's a lot of the times where you'll get the trigger and it'll go right above your right above the previous candle, trigger you in, and then come right back down to the bottom and take you out in less than 3 or 4 minutes, and then go in the direction that you wanted it to go in. So I try to give it a little bit of breathing room, and I also, that's one of the things that will fully send me on tilt, and so I try to avoid that at all costs. And anything I can do to avoid tilt is something that I try to do as much as I can.
Now, do you have a specific window that you trade in, or a specific number of trades you're willing to take?
Um, as many as it takes to win most days. And so sometimes I'm always aiming for one trade a day. If I
Okay,
can just take my one trade, if I take the win on the first trade, I'm pretty much done for the day. But I do like to give myself a second chance if I lose the first trade. And so I'm usually risking a 1 to 2. So I want to make double what I have. And so if I take the loss on the first trade, then it gives me one more chance to at least get to break even for the day. And if
sure,
I don't and I lose that trade, then I'm pretty much done for the day, and I've lost the max limit for the day on that. And then if I win the next trade, which will be the next trading day, it pretty much wipes out those 2 losses, and that's how I try to aim for it as far as the risk to reward ratio.
I love it. Are you a stats guy? Do you keep your numbers?
Yes, I do
Are you
actually.
are you comfortable kind of sharing what those numbers look like for you in general?
Yeah, something that I can say is so I use TradeZella to
Yep.
journal all my trades and things like that. And something that I found very interesting was that my actual win percentage, my win rate for trading is 42%.
Right.
And so it's not very high. And a lot of the times as a newer trader, we have this idea that you need to have a 90% win rate in order to extract some money from the markets.
Sure.
And I don't have a super high risk to reward ratio. 2 to 1 is pretty much what it is. Sometimes it can go from up to 3 to 1 because I'm always aiming for either the highs or the lows. So it depends on what's going on
Sure.
there. But
Sure.
yeah, my win rate is only 42%. And then my daily win rate is a lot higher because I give myself that second chance.
Sure.
So my daily win rate is about 80% after I take the first trade, and then some of that is kind of skewed because I am the first person to admit we sometimes revenge trade, and we're just trying to get back to where we were at the beginning of the day. And so
That's
sometimes
awesome.
we win and sometimes we don't.
Well, and even with a minimum 2 to 1, 42% is a winning percentage. And I think that's where a lot of traders get. You mentioned we want this 90% win rate and everything.
Mhm.
When we understand what those numbers actually look like, because if you've got a 42% win rate, that's, at a 2 to 1. I don't know where's my math? Um,
So when I look at my trade Zella score, and then to the right it tells you I'm pretty much winning 2.5 more than what I'm losing. And
okay.
so if my average loss is, let's say, $300, my average win is anywhere between 750 and like 730 or somewhere in that ballpark range. So we're not at a 3 to 1 risk to reward, but it's pretty much like a 2.5 ish.
And that's beautiful because over time, as we were talking about, that's what you need to get focused on, is what that actually looks like over time. Having numbers like that builds that confidence, obviously, as we mentioned before. So
Absolutely.
let's talk about the other side of things, man. You put in a lot of time, you put in a lot of work, you studied, you bought some courses, things like that. Now that you're here, now that you're on the other side of being a profitable trader, what's different about your life? What has this done for you?
As far as financially wise, I mean, it's incredible what trading can do for you. But what I find more important is the freedom that you get from trading, which is super important to me. I have a 12-year-old daughter and a 2-year-old son, and so the idea is that I can go to my daughter's school when she needs me for a basketball game and different things like that. And so I think the most important thing is the freedom that trading has given me, and also just being able to wake up in the morning, you sit in your office or your room or wherever you are, and you can make the same amount of money, if not 10x what somebody does to go sit in an office. And I think that that's something that is very underrated. And once I figured out that you can make money from your home, it was like a gold mine for me.
Now, are you beyond the world of day job and trading on the side? Is trading your primary role now?
Not my primary source of income, because I do have other businesses that I run, and so that actually helps me a lot. But those businesses as well, they're run from my home,
Sure.
and so the best part about for me, what helped me a lot is that trading wasn't my only source of income.
Yeah.
If it is your only source of income, there can be a lot of pressure that you put on
Sure.
yourself, and especially when you have bills to pay. This is one of those jobs where you can put in 100 hours and lose money.
Right.
That's not normal for that. That's not a normal thing for someone. A lot of the times you don't think of it that way. But if I sit at my desk every day for 10 hours and I actually lost money, in your mental, it'll be like, what? This doesn't make any sense. And so, yeah, that's something that's very big.
And that's a good point because a lot of businesses have that reality attached to them. I owned a mattress shop for 20 years, and there were months where I lost money. I worked all month long, and between rent, advertising, employees, or whatever, you just things just don't work out. It's a slow month, and you're in the red for the month. And trading has the same possibility, and that can be for somebody who has built their life on when I work, I see that paycheck. It can be a really, really difficult transition. So for that scenario, I think it's important for traders to sort of balance that out. When you're still trading on the side, don't risk in trading more than you're making it work, right? Have that risk level be significantly lower so that you can still end the month on a positive until you start to build that framework and that mindset.
Yeah, I
So,
think that's the best part of prop firms,
yeah,
is that the barrier to entry is much lower, and
yeah,
the tuition is much cheaper than you going and getting your own account and blowing it, because you will blow it. There's no
yeah,
ifs, ands, or buts about it. You're going to blow it. And so
right.
it's a great barrier to. There's a low barrier to entry, and that's great for newer traders.
Yeah, and I think that that's important because trading. Look, you mentioned earlier it's hard. This is the hardest thing I've ever done, and I've done some pretty
By
hard things.
far.
You know, I mean, I've been a business owner, small business owner, most of my adult life, and I mean, like I said, I've definitely taken on difficult tasks. Trading's the hardest thing I've ever done, and it's not going to happen in a month or 6 months. I'm not going to say it never happens. There's definitely been some anomalies. I've probably interviewed more successful traders than at least anybody I know,
Yeah.
in the several hundreds at this point. And I've come across maybe two or three that started to see profitability with any consistency in 6 months or less. So
Yeah,
when
I
you
think
factor
that's
in
borderline impossible to happen.
borderline, yeah, for
And
sure,
yeah.
without a doubt. And so knowing that it takes time, being able to manage the nominal expense out of cash flow. I mean, you could literally do this for years, as I have, with a nominal amount of, an expense that I can justify, just like my budget for going out to dinner for the month, right? That could be a similar budget to be able to trade and build my skills in real world scenarios with evals and PAs versus having to, as you mentioned, put in 500 to $1,000 each time, because that starts to go pretty quick.
Oh, absolutely, 100%. If you run your trading like a business, you'll realize that the expenses can get really expensive and they can happen very quickly as well. There's some months where you do awesome and you make a lot of money, and then there's some months where you don't do as well, and that's just the game of numbers, where it's statistics that you're gonna have really good runs and you're gonna have really bad runs, and you have to understand that if you don't have this as if this is your main source of income, you better be profitable, because if
Right.
you're not, it can definitely be a pretty bad thing.
Well, and not to mention, even if you are profitable, you still have to prepare for those rainy days, rainy weeks, rainy months. They're going to happen. And at the end of the day, it doesn't matter if you made 30 grand last month. If you blow 10 this month, unless you have something in reserves, you're gonna find yourself in trouble, and you're going to possibly quit, which at the end of the day, the only way to fail at trading, unless pretty much anything else, is to quit.
Yep.
So give yourself that room, just like you give your trades an opportunity to move with your stop loss. Give yourself an opportunity to have that same kind of buffer as well. Dude, I could
Yep.
do this all day. I say this every week. Here we are
Mhm.
at time. So a couple quick things. Just, of course, make sure if you are in need of a new evaluation, now's the time. 80% off. Go to apextraderfunding.com and use promo code Benzinga to get that 80% discount going on right now. So take full advantage of that. We will be giving away 3 evaluations from this show from the live viewers. So make sure to fill out that form to have your shot at winning one of those 3 evaluations. We are on the countdown to episode number 100. This is episode, if I'm not mistaken, 95. Don't hold me to that, but I think that's the case. I believe, if I'm not mistaken, episode 100 is August 18th. So I'm still trying to work out some special things that I can hopefully do for that. So keep that in mind and make sure to come in live for that one, because we're going to try to have some extra fun on that one as well. Make sure to come back next week for another phenomenal episode of the Trader Bacon Show, because we find the best guests out there, just like Miguel. Miguel, thanks for taking some time and hanging out with us today and sharing some of your insights. I really appreciate it, man.
Thank you. It was a pleasure to speak to you.
Awesome. Now we'll see the rest of you all next week on the next Trader Bacon Show. Thanks for joining the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to join us next time, Mondays at 11 a.m. Eastern.